Welcome to Objection to the Form. This week we've got a special guest, April Jones with April Jones Insurance. Welcome.
Hey, thank you. Thank you for having me.
This is kind of an important topic that I wanted to do this week. I'm glad you agreed to join us. I want to talk a little bit about insurance. A lot of times we've got attorneys on the show, and we talk about fighting over insurance money, or we talk about property damage claims insurance. But I think a lot of the problems that I've run into could be solved on the front end with a little bit of better planning and with better communication to the insurance broker. So I'm glad you're here to join us and to talk a little bit about some insurance law.
Yeah, it's such an exciting topic.
Well, no, it is. Insurance is exciting and it's important. Can you tell everybody a little bit about your business and what you've got going on?
Yeah, so we are an independent brokerage. So we focus primarily on personal lines, so home, auto, umbrella, boats, anything that that's not really business related. That's what we focus on. And, a large part of our book is for the homeowners. That's who our I guess bread and butter customer is, our homeowners. But we're independent brokerage, so we're not married to any particular company. We're not one of the big box insurers. We actually shop for the customer, so that's who we're working for, not the carrier. So we just find the best rate depending on what you need.
Do you have a typical pool that you search from, or is it just any company that's out there that's possible? You can get from.
I do limit some of the carriers. We have excess surplus lines, but only if it's a necessary evil that we have to go that route do we shop it. We do keep within our confines of our carriers that we're comfortable with, that we've weathered storms with.
So you've got some stuff already that I don't quite understand what it means that I'd like to get clarified. So what do you mean like excess and surplus lines? What does that mean?
So those are carriers that are not admitted in North Carolina. So North Carolina doesn't cover them. Sometimes you need them because maybe the typical guidelines that a carrier sets out, maybe they have a pit bull, or maybe they have a trampoline that they don't want to get rid of, or whatever it is. Maybe they have too many claims. Sometimes they have to go into another market for us to be able to insure them, because the standard carrier that's admitted does not want that business.
Is that really a question that what kind of dog do you have and things?
Yeah. Mm-hmm. It depends on the carrier, though. When I worked for a captive carrier company and for close to a decade, and they didn't ask any questions, which blew my mind.
That seemed to be what I recall from my last experience doing that. And so when you say captive, are you talking about just kind of like one of your big brand names?
Yeah, Nationwide, State Farm, Farm Bureau, the big box carriers.
Gotcha. And if I understand, so you're located in the Wilmington area right now, but you've got a new location you're adding?
Yep. So we are going to Hampstead. Never thought I'd move out that far, but yeah.
Well, no, it's exciting. It's a growing area and a great place to be. Well, cool. One of the first things I want to talk about was automobile insurance. And what I kind of run into frequently, and it's a shame when it happens, is people that have been seriously injured and have a great personal injury case, but the person that caused the accident has minimum limits insurance. And I think I remember seeing a statistic somewhere that was kind of troubling that said, I want to say 86% of drivers in this area have minimum limits.
Yeah.
Is that kind of consistent with your experience?
It doesn't with my experience, but we write standard auto. We're not going to write non-standard. So just to kind of back up a little bit, the state limits in North Carolina are 30-60 for bodily injury, and then 25 for property damage. So that's the least amount that you have to carry, per DMV. So essentially what that means is if you hit someone and you injure them, the most that carrier is going to pay out is $30,000 per person. So if they go to the hospital and they're in there for a week and it's $150, that's on you. You have a $120,000 shortage.
Yeah, and that's what you see a lot is that $30,000 doesn't get you very far in the hospital these days, especially with with the way medical billing's going. And so the difficulty comes then, what do you do? So I think a lot of people don't think about it when they're purchasing insurance is the availability of uninsured motorist or underinsured motorist. And that's what you're looking to if you're, if the person that hit you or the person that's injured you only has the $30,000 minimum limits, or they might even have 50 or 100, but it still doesn't cover the $150,000 medical bill. So in those situations, though, from what I understand, it's kind of tricky how the eligibility works for uninsured motorist. And what I mean by that is, I don't think like for example, if you've got a minimum limits policy for yourself, could you have like a several $100,000 underinsured motorist policy or
No,
uninsured?
you can't carry more for yourself than you're going to carry for the general public. So if my minimum limits are 30/60 just liability, I can't carry underinsured motorist coverage above that. Does that make sense?
Yeah.
But so we don't write 30/60/25. I mean, if anyone even asked us to quote that, we would just refer them to a non-standard carrier. And mainly because they just don't understand it, and that's not going to cover anything. And the 25,000 property damage. I mean, you can't buy a Honda Civic for that now.
So are you just morally opposed to
Yes.
it, or okay? Well, that's I appreciate that, because it's a huge problem, and I could
And frankly, it doesn't save you much money. I mean,
No,
it's like $10.
well, and that was going to be the second point, is that I've just had some really sad situations where people that had terrible injuries come in, and they're like, all right, what am I going to do type thing? I can't work. Got to pay all these medical bills, and then you get you see the accident report, and they were hit by somebody in a beater. So it's like, all right, well, chances are 9 times out of 10 that this is going to be a minimum limits policy, and they talk to them about UIM, and so no, they have a minimum limits policy themselves. And kind of what I hear is, well, I was looking for the cheapest insurance available, but when from a cost standpoint, it's
not that much.
No.
And the problem is, I feel that a lot of it's direct to consumer now. I mean, you have Progressive and Geico and everybody, going straight to the consumer. They're going online and just checking the box and not really understanding what it is they're purchasing.
Or like the general.
Right.
Like if I see somebody like
Yes,
the person that hurt them or that hit them and injured them is represented by the general. I'm thinking,
Woo,
and yeah, it's like, oh no, this is gonna be.
Yeah, I don't know if I can take your case.
That's exactly what's going through my head, and not because the general it's like, oh, I'm scared of the general. They're gonna really. It's more of, this is gonna be a shit show, and I don't know what's gonna go on, and it's gonna be difficult dealing with these folks, and who knows. But yeah, so that's.
And it's mainly because they're targeting the consumer that wants the cheapest policy. So they're bare bones. The only reason why they're getting insurance is because they're mandated to.
Well, have you thought about, like, with your marketing, kind of having a cartoon type caricature of yourself that could dance around and
no.
Well, I mean, different.
But I'm not opposed to it.
Yeah, I mean, it's just something to think about.
Yeah.
I don't know. I guess they Meredith kind of set me up with one. I don't know if you've watched
no,
it.
I haven't.
Yeah, so we got to watch the intro. So I've got a little cartoon caricature of myself, like, starting the thing off. But I think it's a key
Just
thing
like
to have.
education.
Yeah, it's a key thing to have in business is your cartoon caricature to that's what people want to see. But so getting back to the point is that it's not that expensive to get underinsured and uninsured motorist coverage. And frankly, what I could say in my experience of practicing personal injury law is the kind of people that hit you, the kind of the bad drivers, are the kind of people that get their insurance with the general, or they get the minimum limits policies.
Right.
Those are the kind of people that are more likely to hit you. I mean, I don't have any scientific studies or anything to prove it, but that's just
actually, a personal friend of mine, I had her insurance, luckily, and well, not luckily, because it was my loss ratios went out the window. But in any case, the person that hit her, I mean, he was illegal. He had no insurance whatsoever, and so luckily her uninsured motorist coverage was there, and it paid. And she was in the hospital. I mean, she had a broken leg. She had a steel rod in her arm. I mean, anyway.
So I mean, you mentioned uninsured motorists. So I guess the distinction being, underinsured is they hit you, but they had minimum limits.
And then uninsured motorists. I mean, that's a big thing.
They've got nothing. That's
right.
the guy with no license hit you, and he didn't have any insurance. So with respect to that, now, what's the relationship between the two? Are the limits typically the same with uninsured and underinsured,
Yes.
or is it so it's kind of a package deal?
Right. It's uninsured, underinsured motorist coverage. So, and you usually just typically match it to whatever you carry. So if you have 100, 300, you'd match it to 100, 300. Because you can't make it higher than what you currently carry.
What's the typical, or what's the maximum you can get in UM or UIM coverage?
It depends on the carrier, but I mean, a lot of carriers will only go up to 250, 500. I've seen higher, but typically that's the max. And usually after that, you want to get an umbrella, and it could you can actually endorse your umbrella policy to have additional uninsured motorist coverage.
Well, that brings up the next topic I was going to ask about is kind of the interplay between liability insurance and umbrellas. But I didn't realize that you could have your umbrella boost your UM or UIM.
Yeah, it's a specific endorsement. So if you don't check the box, then you're not going to have it. And I don't know that the carrier that we represent, that's how they do it.
And what's the typical endorsement cost?
Honestly, that would depend on your risk.
Yeah,
you've got the teenage drivers. I mean, what you have.
Yeah,
so,
no, that's a good point.
I mean, $100 maybe a year.
But yeah, so to potentially get maybe $500,000 more coverage of UM or UIM,
right.
I mean, that's just from a cost perspective, it seems to make sense. And so with liability insurance, that's the automobile insurance that the state requires us to have to potentially pay claims if we injure people or damage property when we're driving. We talk about umbrellas, which is that's kind of like an extension, as I understand it. It's like a way to, it provides more coverage than maybe your liability coverage would do. So is there a point where you max out in liability coverage, and then that's when you get into the need for an umbrella?
Yeah, I mean, typically if you have assets to protect, I mean that's who the candidate is really for umbrellas. I mean, you want to protect as much as you have in assets so that someone doesn't sue you.
Sure, and I guess I asked the question wrong. I guess what I meant was, is there like a number of, like, liability insurance only goes up to $250, $500, or liability insurance only goes up so far, and then if you want to go higher than that, you need to get an umbrella.
Sorry, yeah. So it depends on the carrier. Again, some carriers go up to $300,000 for liability on your homeowners, or $500. Some of them, if you go to $500, they're going to want to see evidence of an umbrella. Auto insurance, typically the high is $250, $500. So yeah.
And then with umbrellas, I didn't realize that you could add UIM and UM, but it's my understanding that typically with an umbrella, it's going to be a little bit broader coverage than just automobile coverage.
Right. So umbrella, if you think of it like an umbrella, is covering all of your underlying liability policies. So if you have rental exposure, as long as you have an underlying liability policy that extends and covers that, then the umbrella will cover the underlying liability. So for example, tenant occupied homes, if you had, and that was the liability was covered, then as long as it's not in a commercial name or whatnot.
Yeah.
Your auto, your homeowner's risk, if you have a pool and a kid gets injured, those type of things are going to be covered.
We love slip and falls.
Right.
So that's slip and falls is always something that comes up a lot. Dog. You talk about the pit bulls.
The pit bull dog bites.
Yeah. So with your umbrella coverage, is that kind of governed with some sort of a range, like the 250 to 500, or can you go up as far as you like?
So essentially it starts at a 1 million. So in increments of 1 million. Sorry, I can't talk. But typically after 5 million, I mean, you're going to have to call a brokerage and get excess and surplus. Over 5 million, it gets a little tricky.
And
Not a lot of people want to be on the hook for that much.
Yeah, they probably figure you're up to something, or I imagine, or it takes some kind of.
Or if you have that much money, you're an easy target to get sued. I mean, I think that's what the rationale behind it is.
Yeah. Well, you mentioned something a moment ago that I kind of want to touch base with, and the landlord coverage, or the renters issues. A lot of times folks kind of have a investment strategy. If you buy a home, you live there for a while, establish some equity, take that home, turn it into a rental, and buy your next home. But the policy that the folks have, a lot of times they just keep their original policy. They don't think to check in with their insurance company.
That's true. And then, of course, your occupancy, has everything to do with what type of policy you should have. But it needs to be rewritten as a tenant occupied home. Yeah,
because I've encountered some situations where, it's landlord liability type thing, like your slip and fall, or something fell, or it hit somebody, or I haven't had a smoke alarm case or a smoke detector case, but that's a pretty big source of potential liability for landlords. And it's very important if you leave the house as a resident to add that. I mean, I imagine that's just a simple endorsement or something to add to your policy.
What, for the landlord?
Yeah.
Well, you have to it's on a completely different form, so you have to rewrite it. altogether.
So I didn't realize. So what's so it's not a matter of just like, hey, I'm renting it. Just make sure to.
Right. Yeah, because you have typically the standard home policy is an HO3 policy. For tenant occupied homes, I mean, you're in your dwelling policies, your DPs. So it's a completely different form. It has different coverages, different exclusions. It's just written differently. So you definitely need to talk about it as soon as you're in vacant policies too. I mean, if nobody's in the home, that can become an issue too. And I've seen claims denied because people don't tell your agent, or admit that the home's going to be vacant for the next year.
Well, that's so I was going to say, like, that makes me think, what do you need to, I mean, you might not plan on it being vacant. I mean, to what's the extent? I guess it'd have to be a situation where
like
you just
over
know.
60 days, that's when we need to talk.
I see. And so if it's a second home or something like that, does that, I guess they just figure if you have a second home, you're probably going to touch base at least once every couple months there?
Yeah, second homes are a little bit easier, and typically you can put them on a HO3 as long as that carrier allows for second home. But
Yeah.
I mean, it's just they have a little bit more scrutiny or underwriting questions. But as long as it's this true second home and there's no rental exposure, it's easy.
Yeah, because there's probably a lot of folks that maybe they're like summering up north or coming down here in the winter
there's
months.
A lot of second homes
here. So you might not be there every
Right.
2 months or that sort of thing. But I guess as long as they understand, look, this is going to be a second home type situation.
Right.
It's not going to be
you just
like
have to find the carrier.
not going to be like a vacant crack house or
Right.
something where and I imagine that's kind of the concern with a vacancy is that you don't want people the vandalism or squatters. Yeah, you got the squatters. You got I used to
not only that, but water. I mean, the vacant homes, you have more risk. I mean, if it's winter and we're about to have a freeze, no one's there to monitor if a pipe bursts or whatnot. So.
My old office was downtown, and we had difficulty with like people living under the house, and I was like, I feel bad for people that are in that situation. And you don't want to, keep people from getting shelter, and so a lot of times I would just kind of, just kind of live and let live type attitude about it. But then we saw what was going on over there, where people were full on moving in beds, and there were shaving kits and candles. And the candles was the thing where I was like, all right, this is enough, because I mean, you can't have people lighting candles under your
crawl space.
No, that's not a good situation. But I think that's important I think that's kind of one of those things that you see that people don't understand. And another thing, in the past I've dealt with some kind of, some I guess I forgot what you called them, but like your retail, was it, you call it retail or your big, your Allstate, State Farms, whatever, that weren't from this area and that weren't as familiar with the challenges in insuring a home in kind of a coastal environment.
Right.
I mean, we've had, I guess, 3 years in a row of maybe 4, I guess, Matthew, of just substantial storms coming through this area. And is it becoming more difficult for you to insure homes in this area?
Well, they're definitely tightening up, and the market is hardening, so to speak. But a lot of carriers have pulled out. I mean, we had 3 carriers basically, cease writing late last year, and issuing a few non-renews if it didn't meet their guidelines or what they cherry picked. But so yeah, it is changing. I mean, reinsurance is going up because of the losses. So as their reinsurance goes up, they're going to raise your insurance to kind of offset that.
When a large and so reinsurance, I guess that's the insurance that the insurance companies have, if I understand. So with your typical, so for a property owner and they experience damage in a named storm or a region or however it goes, how long does it usually take before that storm damage ends up affecting their premiums and their policy renewals?
Like the reserves. Yeah, so when they start dipping into the reserves, they need to replenish it. So a lot of times it's the next year or, maybe a couple of years after that. But I mean, we definitely saw the increase. It just kept coming. And then, their rates are set by the North Carolina Rate Bureau. So with that said, carriers like the North Carolina Joint Underwriters Association, they can't deviate from whatever the Rate Bureau sets. So if they set the 9.8 like they did last year, that carrier has to accept it. Other carriers, like Lighthouse or, Frontline, they can cherry pick the risks that they want, so they don't have, as much in the case, if they cherry pick the risk, then they don't feel that they have to accept the whole, they can deviate from the rate, is what I'm saying.
Yeah.
So they don't have to take it. But last year, everybody took it.
Well, I'm glad you brought up the insurance commission, because that's something that you hear a lot about, as far as, well, let's say it's a insurance regulated state, the cost is what it is, and in some respects, like I run into that sometimes with title insurance, like where there's not as much, it's kind of the rate is what it is, and there's certain, how much difference is there in North Carolina? If I look, for example, if I've got the same vehicle, I'm asking the same coverage, I've got the same driver's license or same driver's record, will I get back 5 equal quotes from each of the companies, or are they allowed to assess the risk differently and charge me a different premium?
Yeah, so they can charge, they can definitely deviate. Auto insurance is, I haven't seen as many swings with the auto insurance as I have had the homeowner's insurance, in the difference in premiums, because, actually auto insurance went down last year because of the pandemic. They were giving back refunds or rebates, and sorry, I lost my train of thought.
Well, no, we're just talking about how much room is there to vary from rates, or how much room do you have for an insurance company when you're in an insurance commission regulated state? Like for example, the Allstate commercials where you hear like the safe driving discounts, or they'll send you a check. From what I understand, that doesn't.
It doesn't happen in North Carolina.
Yeah, same thing, or like what Liberty does, their new car, for their new car replacement rate,
right,
or something.
They have advertising budgets, and they advertise all over the United States. So North Carolina doesn't allow those kind of gimmicky rebate type deals, just like the diminishing deductibles or whatnot. They didn't.
And so, what's the thought process behind that, with having that much regulation into how an insurance company prices its products?
You're stumping the dummy.
No. Well, I don't. And that might be outside of what we're talking about. But no, it's just always, it's always, I'd like to get a check back for not getting in a wreck or something like that. That'd be outstanding.
I don't know what their rationale is. I think that they just pretty much, I would just venture to say that they just want, all the carriers to kind of be on level ground to a degree, and to deviate based on credit and controllables, not to have this kind
but I guess, being back to the point then, that the insurance companies do have the latitude to charge different prices,
right?
And it's kind of just a matter.
And each carrier has their own set of discounts that they go after. This carrier might be heavily credit based, where this carrier doesn't check credit. They just have different guidelines. So they all pick and choose what their discounts are. So
when you're writing, or when you're selling an automobile insurance policy, are you able to pick from like a Farm Bureau or State Farm, or are you kind of doing out of a different pool of
right?
companies?
So the captive carriers won't give contracts to independent agents, because they have their agents are like their employees, and they can only sell their stuff. So they're not going to give us. Actually, Nationwide just kind of started giving out independent contracts, but all the others don't. So we have like Progressive or National General, Safeco, those type of carriers that are marketed for the independent agent. So with that said, they're all kind of neck and neck right now, because they're all competing with the budget, for the business, and they've all lowered their rates, a tad. But we have those carriers, Safeco, National General, and all of them are pretty heavy credit based right now.
Gotcha. And so I guess going back to the issue of a homeowner in this area, you mentioned that kind of some of the recent trends, or that some of the carriers are pulling out of this market. And I guess you've got limited choices. One of the things that you see a lot of folks do is insure through the NCJUA.
Right.
And I was wondering if you could kind of explain a little bit about what is the JUA and how that works.
So it's essentially was set up as the market of last resort. If you can't get insurance otherwise, or through another carrier, then that was your last resort to go to. Why it's become so popular on the coast is, a decade ago, a lot of the carriers excluded wind from their HO3 policy. So we had to use that. It just became part of our, everybody had a policy through the joint underwriters, because no one was carrying wind. But eventually the carriers, started cherry picking the homes that they wanted and would include wind, so it kind of became a thing of the past. but they can't deviate from the rates. They have to accept whatever the risk is, and with that said, they're going to be higher than most.
So in this cherry picking concept, we've got certain things that they're pricing gimmicks that the insurers are prohibited from doing, but can they go on kind of a home by home basis and say so it's not like a district where we say we'll insure this zip code but not the other. They can take it down to this looks like a decent house. We'll do this one.
Yeah, new construction, new roof, the plumbing. They'll ask questions. No polybutylene. No vicious dogs, no dog bites, bankruptcies. I mean, they have like a laundry list of, guidelines that you have to fit and check in their box. And if you do, then the rate's going to be insane. For example, a new construction home, 400 rebuild. I mean, we're seeing rates, like 900 to 1100 a year, and that includes wind.
So the insurers want to insure new construction
because they look at it and they're like, hey, they pretty much, there's absolutely no risk except for hurricane or catastrophic risk that they foresee. So for them, that's the business that they're going after and they want.
With the dogs, can you just say, well, do you have a vicious breed? What is it like? Mutts? Can you say that?
Yeah, they're tightening down on the dogs. I mean, they'll even ask us to send in a picture. I mean, it's getting pretty crazy. But pit bulls, Staffordshire Terriers, Chows. Great Danes on some, German Shepherds on some. Each carrier has a little bit, has certain breeds that they don't want, but so we just kind of have to. It's just a puzzle, really. We're just like, okay, did she fit this? Policy, can she fit in? But if and a lot of people say, oh, it's a mixed breed, and then they go take a picture. Or they go to the inspector comes to the house and they look and they're like, no, and they.
That's where I think then maybe you need to get into the dog DNA. Or something
we actually did a dog DNA on our dog. I thought it was a lab boxer mix.
Was this for insurance purposes or just curiosity?
Curiosity.
How does that work?
What, the dog DNA? You just send it in just like the 23andMe, and then it comes back and it gives you a breakdown of all the breeds that your dog is, and then gives you a little synopsis. It's pretty interesting.
How many breeds did your dog have?
She had 5, but none of them were lab and none were boxer. She had the American Staffordshire, which is on the ineligible. She had Chow, ineligible. I was like, dang it. I mean, I wish I wouldn't have known.
Yeah. Well, it is kind of
still a mix.
Yeah, my dog's a mix as well, and so it's like I've always wanted to do that. But
it's fun. I mean, and then once you see the breakdown of the breeds, you're kind of like, oh, okay. I mean, you can kind of see it.
Have you gotten into the pet insurance market yet?
I have not.
So I can't remember who it was. Maybe it's Live Oak.
I have pet insurance, but I don't sell it. Yeah.
Yeah, because I think it's like maybe Live Oak or one of the local companies, like they're offering that in their benefits package now.
Are they?
Pet insurance. So
we have it through Nationwide, honestly, and it was a godsend. She had to have 2 surgeries on her meniscus. She had a meniscus tear or whatnot, and it paid for the her surgeries. So I do like it, but we just haven't sold it. I don't know enough people that would.
Well, I think it's one of those things that that people don't know much about.
Yeah.
Because I first saw it in a vet's office. I was kind of thinking this is a scam. Like I personally think dental insurance is a scam.
Oh,
I know some people. I haven't had that since my last job. It was a benefit, so I had it there. But yeah, it just seemed crazy. It was like for the essentially you were financing your cleaning or something like that is what it was. And
right, because the numbers, if you tally up all your monthly premiums, it's the same as it cleaning.
And then if you have anything serious, your coverage cap's like $1,000 or something. It's not gonna work anyway. Well, so I guess your bread and butter is auto and home.
We do life insurance too.
Let's so with life insurance. That's an area that confuses me as well because I get the kind of distinction of your whole versus term, and I mean that's just kind of your whole. I guess you can continue the premium throughout the course of your life, and it's typically more expensive because term is essentially it's if you beat the expiration of the term, you don't have any more coverage.
Right, you're done.
But then there's more to it than that.
Lucky.
Yeah. So are you one of the do you sell life insurance policies primarily as kind of a disaster planning, or do you sell it as investment?
I don't do investment. I believe in term, and that's my personal belief.
Yeah.
But so I sell term, just basically to get you over the hump. If you have kids and have a lot of debt, whatever the case may be. So I have a multi-rater, and basically it quotes all the carriers. But if you want whole life, so the difference is, just to explain it, is basically term insurance is just that. It is specified for a certain term, 15 years, 20 years, whatnot. If you die within that time frame, it pays out a flat amount, whatever your death amount is, $250, $500, whatnot. The whole life is permanent, so you pay for it, the same thing, a term, but after that, the death benefit remains, and there's going to be cash values that have accumulated in it. But for me, I just think you should probably talk to an advisor or, financial advisor if you are looking at investments and kind of using that as a tool.
Well, and I was, I think what you say kind of lines up with a lot of what the financial planners are saying is like, look, life insurance is not an investment. It's more. But then, I've heard the flip side of that. Some people say it is. That's why I was going to.
Salespeople.
Yeah. Well, that's why I was like, I want somebody to explain this to me, like how this is, because it seems like I've done
the math. I've tried to make it work, because my captive carrier, they push whole life, and I've tried, and I just could not believe in it. But, it is what it is.
No.
Hey, teach their own.
Yeah. Well, no, it sounds like you're practicing ethical insurance. You're not selling minimum limits policies, and you're not selling people whole life insurance investments.
Right.
So that's,
I can kind of pick and choose now. I can't get fired for what I don't sell.
Yeah, well, that's right. So with the life insurance products that are out there, you mentioned term being kind of a temporary thing, and it's kind of like protect your family in case something terrible happens. Can you sell out of a term policy?
What do you mean?
Like, let's say if you've had it for 10 years, and you decide you don't want to make the premiums anymore. I know it doesn't have a cash value,
right?
But
you can just cancel it.
I've heard the term surrender value. Like,
that's for cash values.
Okay, so it's the same
just
thing.
Basically, if you stop paying, it's over, done, canceled.
And so the insurer takes the position that there's no value in the insured just walking away from paying their premiums.
Yeah, either they got divorced and they don't need to, whatever the case may be, that they don't need a death benefit anymore, they can just cancel it.
So I've got an ethical insurance agent kind of question for you, like how insurable interest. Because I remember that was one of the first things we did in law school and insurance is kind of, I guess, the moral dilemma type stuff, because you don't want people going around, I guess, betting on others' demise, type thing.
Yeah, I had somebody early on that came in and wanted to insure their pastor.
Yeah.
Wait, no, why?
Yeah. Well, no, I mean, because you've got one people. So I'm kind of like I like to dabble a little bit in sports betting, and it's kind of like the deeper down the rabbit hole you go, you'll have people like this Sunday. You're going to have people betting whether the first play is a run or a pass. You're going to have people betting, what's the score at the end of the first quarter. You're going to, you got some real gambling degenerates out there, and people will bet on anything. They'll bet on the election. They'll bet on the commercials. They'll bet on whatever it might be. And so I guess it's almost like an extension of it, like with the stock market and kind of what we saw with the GameStop and all that stuff. I guess it could be a situation where people say, well, I don't, this guy seems healthy, but I think people don't understand how he's living. I've got some, like maybe I'll put in a policy on him, see where it goes. What is the kind of standard as far as if you're going to write a policy for somebody, what is your standard for an insurable interest?
Right. So they have to have the insurable interest. Absolutely. It has to be a spouse, a child, a parent. You just can't go out and take out a policy on your neighbor, and then hope they die.
Yeah.
You have to be directly affected, or key man insurance if it's a business, and them passing is going to negatively affect. I mean, you can insure in business situations too.
But it has to be, I guess, like a critical employee.
Right. Or your partner.
Who's the insured? Who is it? The business is insured, or is it the business owner? Or how does that work? Like if
as far as the life insurance part, you mean?
Yep.
So basically, key man, or you have a buy-sell agreement or whatnot, and then if the partner died, then basically you get paid life insurance. So maybe you'll buy him out, or buy his wife out rather.
Yeah.
So you're not a partner with his wife.
A lot of times in the family law context, you'll see divorce decrees or child support decrees require the supporting spouse to keep a life insurance policy to secure, I guess, future alimony payments or future child support payments.
Yeah, that too. And also I've seen it where people that get business loans, dentists, if they, the bank will ask them to get a life insurance policy to pay for the debt.
Do you do credit insurance?
Mm-mm.
So the way I understand credit insurance is it's sort of like life insurance, but it would be like if I became disabled or passed away, my loan would be forgiven, but there's no there's no net payout. It's just essentially the loan balance is what's
kind of like mortgage premium insurance.
Kind of.
Yeah. I just honestly, if someone calls me and asks me for any kind of just trying to cover debts, I'll just do standard term.
Yeah.
Just how long do you need it? And,
do you
it's gonna
do
be cheaper than that anyway. And then the balance, the death benefit isn't going to fizzle. So.
Do you do any disability?
I don't. I'd rather broker that out. But I used to sell it, so I'm familiar with it, to a degree. But we try not to wear too many hats in my agency. Mm-hmm.
Yeah. Well, and so what would you say the benefits are of really kind of specializing and kind of limiting the types of products you're selling?
I mean, you have to learn how to say no. I mean, I don't. Originally I wanted to be all things to all people, but I realized how taxing that was, and you get to a point where you're not good at anything. So early on, I just focused on personal lines. I wanted to do commercial, just kind of come out of the gate and, offer all things. But by limiting my focus, it freed up a lot of time, and then I could just be really good at what I do.
Yeah, and I imagine, especially in the insurance industry, like if you're not understanding what your typical underwriter's looking for a particular type of policy, or if you're just trying to, it's almost like every day is a new day when you're trying to submit the policies. It's really hard to kind of develop either the systems or kind of letting your customers know what to expect on the front end.
Yeah, and the knowledge. I mean, it's easy to make mistakes. I just had to focus on just a few things and let other things go. And commercial, I mean, it's so taxing. I mean, the time that it takes to do a commercial application. That's why we said, I don't want to do this.
Out of that.
Well,
I think that's insightful. It's something that like I've kind of struggled with too, and is like you hate turning away a potential client, and like, well, I can do that. Why
and
wouldn't
it's
I?
hard to say no.
Yeah, but there's financially, and it's kind of like sometimes it can be it's just a matter of like it's difficult to say somebody else is better at this than me. Like that you should go see a better option.
Yeah,
and that doesn't mean necessarily they're better, but I mean they've got more experience in that particular area.
It's their hat that they're wearing, and people appreciate that. I think, I tell people all the time, hey, look, I can't do this, but let me tell you who can, and refer them to the agency down the street. They might not like that, but we can't do the mobile homes.
Yeah. Well, so I love mobile homes. That's one of the things we do. But I guess so you're saying that's not one of your things.
Well, the majority of our business comes from lenders, and most mobile homes, if they're older than 20 years, you can't really put replacement on them. So that's really hard to get it through underwriting. So I just realized I'm not going to spin my wheels trying my best to make this square peg fit in a round hole. Yeah. So that's why we don't write it. not that I have anything against it. Just
And so do you find the best time sucker? Yeah. So do you find the best way, I guess, to develop or to cultivate those relationships is I guess through loan officers and things like that?
Yeah, that's probably about 80% of where our business comes from is lenders, real estate agents, and then just our own book and word of mouth.
Yeah. Well, how long have you been in town?
In Wilmington?
Yeah.
Since I was 5.
Well, yeah, life longer. I guess meant your company. So you said in the beginning you were with a captive agency?
Right, yeah. So I started insurance in about 2010 and then went completely independent in late 2017.
Yeah, well, congratulations. Sounds like things are going great. And I'm excited to check out the Hampstead office.
Yeah.
Congratulations on that.
Yeah, we'll have a big little to-do party.
Nice.
send
Nice.
out the invites.
Yeah. Well, thank you very much for coming.
Yeah,
It was a
thank
pleasure
you.
meeting you, and thanks for sharing your expertise about insurance with us.
Thank you.
Thanks.